Am I the only one that didn't know BlackRock just hit a record with their Bitcoin ETF? Seriously, this is the kind of news that can fly under the radar if you're not watching closely, but it's a huge deal for both Wall Street and the entire crypto space. BlackRock, the world's largest asset manager, isn't just dipping its toes into Bitcoin, they're making waves that could reshape the entire landscape of digital assets. While everyone's talking about sell-offs, the real news is all about surging inflows. It's easy to get distracted by the noise, headlines about volatility, panic selling, and sudden price drops. But if you look past the surface, you'll see a different story unfolding. A tidal wave of institutional money flowing into Bitcoin, and BlackRock is leading the charge. Let's break it down. So here's what's actually happening. Despite some dramatic headlines, BlackRock's iShares Bitcoin Trust, aka IBIT, just smashed records in May, pulling in over $6.3 billion in new money. That's not just a blip on the radar, it's a massive vote of confidence from investors who are looking for long-term exposure to Bitcoin, not just a quick trade. That's the biggest monthly inflow since the fund launched, pushing their Bitcoin holdings past $71 billion. To put that in perspective, BlackRock's IBIT has become one of the fastest-growing ETFs in history, and it's now a major player in the global Bitcoin market. This isn't just about numbers, it's about influence, and BlackRock is flexing its muscles in a big way. For context, that's about 3% of all the Bitcoin that will ever exist. Yeah, that's a lot of conviction. Remember, Bitcoin's total supply is capped at 21 million coins, and BlackRock alone now controls a significant chunk of that. When a single institution holds that much, it sends a powerful message to the market. Bitcoin isn't just a speculative asset anymore. It's becoming a core part of institutional portfolios. And it's not just buying and holding. Traders are betting big on IBIT options, with one placing a major bullish bet on a price jump this month. The options market is heating up, and that's a sign that sophisticated investors are looking for ways to amplify their exposure to Bitcoin through BlackRock's ETF. These aren't just retail traders taking a gamble, these are institutional players making calculated moves. So while some long-term holders are selling and Bitcoin's price is swinging, institutions like BlackRock are showing major confidence. This isn't just about riding the hype, it's about a fundamental shift in how big money views digital assets. The fact that BlackRock is doubling down, even as the market gets choppy, tells you everything you need to know about where they think this is headed. Of course, there are risks. The quantum computing threat made it into BlackRock's official filings, and nobody's ignoring crypto's wild side. The technology behind Bitcoin is robust, but it's not invincible. BlackRock is well aware of the potential for disruptive tech, regulatory changes, and the unpredictable nature of crypto markets. That's why they're hedging their bets and making sure their investors know the risks. But if you thought BlackRock was backing out, think again. Institutions are still piling in. In fact, the trend is accelerating, with more pension funds, endowments, and even sovereign wealth funds exploring Bitcoin exposure through regulated vehicles like IBIT. The narrative is shifting from, is crypto safe, to, how much should we allocate? So next time you see a scary headline, remember, the biggest players aren't running away. They're using the volatility as an opportunity to accumulate more, while the rest of the market panics. It's a classic case of smart money versus weak hands, and right now, the smart money is betting on Bitcoin's future. They're gearing up for more. BlackRock's bold Bitcoin bet isn't just a headline. It's a signal that the era of institutional crypto adoption is here. Whether you're a skeptic or a believer, one thing's clear. The world's biggest asset managers are making their move, and the ripple effects could shape the future of finance for years to come. Now, let's zoom out and talk about the ripple effects. BlackRock's record-breaking inflows aren't happening in a vacuum. They're setting off a chain reaction across the entire crypto market. Think about it. When the world's largest asset manager makes a play this bold, everyone pays attention. And it's not just other asset managers or hedge funds. We're seeing a shift in how regulators, traditional banks, and even crypto-native companies are positioning themselves. First, the copycats. Within weeks of BlackRock's headline-grabbing performance, rival firms started ramping up their own Bitcoin ETF offerings. Suddenly there's a race to attract institutional money, and that means more competition, tighter spreads, and most importantly, more legitimacy for crypto as an asset class. Every new ETF approval or inflow report is another domino falling, pushing digital assets further into the financial mainstream. But the impact goes even deeper. Banks that once dismissed Bitcoin as a fad are now quietly launching crypto custody services and research desks. Pension funds and endowments, which used to tiptoe around anything too risky, are now asking how to get Bitcoin exposure for the long haul. Even sovereign wealth funds, responsible for trillions in assets, are reportedly exploring the Bitcoin ETF space. And let's not forget the crypto industry itself. The surge in institutional interest is forcing exchanges, custodians, and wallet providers to up their game on security and compliance. The days of move fast and break things are fading. Now it's all about trust, transparency, and meeting the gold standard that Wall Street demands. Of course, this doesn't mean the road ahead is smooth. As more big players pile in, the stakes get higher. We could see more regulation, tighter oversight, and new challenges for both old and new investors. But one thing is undeniable. BlackRock's move has changed the game. The floodgates are open, and the crypto market may never look the same. So whether you're a hardcore Bitcoiner or just crypto curious, pay attention. The dominoes are falling, and the next move could come from anywhere. The question isn't if institutions will shape the future of crypto, it's how fast and how far the transformation will go.